Moving averages are like a filter that smooths out price movements over a specific period of time. They are calculated by taking the average price of a security over a certain number of time periods, such as days, or weeks, or even a month. The point of smoothing out the price movements is to help us see the underlying trend of the security. This can help traders and investors make better decisions about buying and selling. There are two main types of moving averages: simple and exponential moving average. A simple moving average gives equal weight to each period in the calculation, while an exponential moving average gives more weight to the most recent periods. This means that an exponential moving average is more responsive to current price movements than a simple moving average. The purpose of moving average is that it can help to determine trends and signals from crossovers. For example, if a shorter-term moving average, like the 20-day moving average, crosses above a longer-term moving average, like the 60-day moving average, it's called a golden cross. This indicates a potential uptrend in the security. The reverse, when the shorter-term moving average crosses below the longer-term moving average, is called a death cross. This signals a potential downtrend. However, even though the moving average is a useful indicator to help determine future trends and signals, it also lags behind the actual price. As moving averages are based on past prices, there is always some degree of lag between the actual price movement and the moving average. However, this lag can be reduced by using shorter-term moving averages or by using exponential moving averages, which are more responsive to current price movements. In summary, moving averages can help me see the trend of a security, and crossovers can indicate potential buying or selling opportunities. But I need to be aware of the lag between the moving average and the actual price movement. Technical analysis can be complex, but with a little bit of understanding, anyone can use it to make better trading and investing decisions. Make sure to click the subscribe button for more videos like this.